Hey investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Palo Alto Networks. Palo Alto Networks is a compelling investment, it's not particularly expensive, and there's a lot here to like about it. At the same time, I do highlight one of the blemishes that I find in its profitability profile, and we're going to discuss that when I discuss the rule of 60. So I'm going to just jump right in. This is an interesting graph right here. So I've highlighted, I don't know if you can pause the video perhaps, I've highlighted several names in cybertech, and you can see here that compared to many other of its peers, not only is Palo Alto faring the best in the past 3 months compared to the rest of its peers, it's actually appreciated the share price by 2% over the past 3 months. Now you're going to be like, oh my god, 2% is not a lot. Now think about it, right? So you got CrowdStrike there that lost approximately 36% of its more than a third of its value in the past 3 months. Tech as a whole has been obliterated. And in that line of thinking, cybersecurity has done quite well, and notably, you can see there in purple at the top, Palo Alto has done the best. And I mean, it's that idea that perhaps it's early days, but perhaps we could say the value is making a comeback. Now, I don't want to kind of go down that rabbit hole, but that's a very interesting discussion that I think that we could have at some point. Compared to other names that have sold off by approximately 40 to 60% in fintech predominantly, but it's been really spread. It's really interesting to see that cybersecurity has remained relatively immune. Social media is down, loads, just like ad tech is down. There's loads of places that have been hit, but cybersecurity has remained quite strong. Now, here's the thing: Palo Alto Networks is 17 years old, right? And for it to actually be accelerating its growth rate is something that's quite interesting. So you can see here, coming out of fiscal 2020, so remember, the fiscal year and the calendar year are misaligned, okay? But coming out of fiscal 2020, they were growing at, let's say, the mid-teens to high teens, and then it actually accelerated, and now going to finish fiscal 22, they're pointing to approximately 23% year-over-year growth rates for the year as a whole. Their fiscal year finishes in the summer, so it's kind of misaligned, as already alluded to a few times, but you can see there is clear some acceleration here, so it's quite interesting to see that. Now, what does it actually do? So it's Palo Alto Networks is a cybersecurity company, okay? So if you think about it, previously companies did the bulk of their work on premise, right? So there's the digital transformation. This is something that we've heard about countless times, but if you have a system that was predominantly on premise, you would only have to configure a firewall around your premise, right? But right now, the bulk of the work is in the cloud. So you've gone from being kind of secure in your little patch to having to operate in the cloud. Now, as you operate in the cloud, you need to have the cybersecurity company that's going to protect you in a zero trust environment, right? So if you think about it, right? It's not only that you might lose some data to your peers or to your competitors, you might actually be held to ransomware. And as the head of IT, your sole job is to protect your company's IT infrastructure. So what's your incentive if you're the head of IT? Your incentive is to keep your job. You're going to do whatever it takes to make sure that the IT is protected. So you're going to go to a publicly traded company and hire their infrastructure. And that's really what's compelling about Palo Alto is that they're not really going to as far as with CrowdStrike against extended detection response. So they're much more around that kind of working on the edge and having a firewall on the edge. It's not a pure play subscription business model, and that's part of the reason why the valuation probably isn't that extended. It does have a large portion of its revenues does come from products too. So that's probably one of the things that's put investors off. But in cybersecurity, it's not like in other spaces. It's not an all or nothing winner take most environment. You're able to take enough market share to really continue to grow and have reasonable profits. And it's not like in other places where if you're not the number one player, you're going to be basically left with nothing around. Now, if you want to look and pause the video here, they talk about aspiring to the rule of 60, and they compare themselves to the likes of Adobe and Microsoft. Now, I'm all for making cash flows it's not all about revenue growth rates, but when they talk about the rule of 60, the bulk of that comes from its profitability profile. Now, if you consider this, right, so if you look here in the red arrows means business acquisitions that they've made. And it shows that approximately 50% of the cash flows are being deployed to make acquisitions. So a lot of its growth is inorganic, and that, obviously it doesn't get factored in the rule of 60, but it's just something to kind of put out there so that you can think about when it comes to looking at this company if you're interested. Now, I think that this is still a cheap company, right? So if it's a cybersecurity company priced at 10 times sales, okay, so has a large total addressable market, it's clearly growing. If you compare it to Sentinel-1 is priced at 50 times forward sales. So in that light, paying 10 times, I feel that the odds are favorable here. So, when it comes to investing, it's all about the odds, right? So the best investment isn't always the best company, and it's just sometimes you go for the mediocre company that's making cash flows and, not paying a lot for it. It can be quite interesting. Perhaps I actually make this claim that perhaps the best investment decision is actually learning to, have the conviction to buy and sit on one's hands. So I don't know, I'm just kind of putting it out there, let me know what you think. And yeah, if you want to know what kind of stocks I'm actually really passionate about, I'm looking to buy right now, don't forget to check out my marketplace, Deep Value Returns. Come over to Seeking Alpha, see what other people said about my marketplace, look at the reviews, and yeah, I look forward to seeing you soon. Thank you so much. Bye.